got CPI coming out in about 5 minutes, 4 minutes. We're not looking to watch the headline number. Oil is up, and it's up big, so we do expect the 3.3% that they are forecasting. It could come in at 3.2% because oil's only made a $20 move. So it could come in a little bit lower, 3.2, but we are expecting 3.3. The number that we are watching is going to be this number right here. This is the number the Fed keeps alluding to. And you can see how it has been sticky since it's a cent, right? In December 2021 and all of 2022. So this is the number that they're watching. This is the reason why they're still very, very hawkish. So this is the number we're going to watch. They're gonna come out at, it's expected to come out lower at 4.7, which would be nice. That would say that core is actually seeing a little bit of a pullback on inflation, but that's without energy and food, right? So that's why we know the headline number is going to go up, because the headline number includes energy. So here we go. We'll see what it comes out. But this is the trade that I'm really, really looking at here, is the pound dollar. I like it lower. We'll see. The dollar has been forming a descending wedge formation, and I am not a pattern trader. Any of you that know me, have been with me for any amount of time, know that. But these patterns are traded. People trade them. And here is your longer term ascending or descending wedge formation. If I pull the map out real quick, or the chart, sorry, if I pull the chart out, you can see here's 2021, here's 2022, here's 2023. So on a yearly basis, this thing is moving to the upside. It's only down this year, right? And it was up earlier in the year. So that's making the longer term descending wedge formation. Now this low right here should have stayed in, right? This is a massive, massive drop. If you look at it on the monthly time frame, it is a failed downside reversal, all right? Because it closed back above support, and then here you are already in August, which, you know, we are just barely in. Today's the 10th. You've already tested last month's open. If I put a line there, you will see that you have pretty much tested last month's open. There's a little bit of black space in there because the chart is black in between the wick high and that line. So that's the area of which we are expecting this thing to go. Now, I know I was bearish on the dollar for most of, if not all of 2023. Well, this is August, so we can say that pretty much happened. I mean, you can clearly see for 2023 it is trending down. It has not made any higher highs yet, and but on the daily time frame, it is above reproach to look for bullish entries on this thing. All right, so we will see. I need to take that call, but I'll take it later. We need to see this thing catch support and break to the upside. Now, what that's going to do is that's going to cause me to have to close out of my USD JPY short. I'm short from here. I'm still a good 800 and something pips in the profit, so I'm going to go ahead and take profits on it. The reason being is because the BOJ was supposed to intervene. Remember, that's why we got short in the first place, was because the BOJ was going to intervene. They were going to raise interest rates, blah, blah, blah. But they didn't. So the spread between the interest rate differential between the BOJ and the USD is massive. We have 5% interest rates. They don't have any interest rates. So people will get long this for the carry, as I am paying to sit in this short the carry because of the interest rates have such a wide spread. Now, we were bullish USD JPY down here a long, long time ago because of that fact. Because the US had 2% interest rates and the BOJ had 0. So we were looking for bullish breakouts, and we got it. We just missed the trade. We never did catch that bullish entry. So basically, when we had heard rumors that the BOJ was going to interfere with the currency, that's when you've seen a blow off top on this asset. But come 2023, a brand new year, what has it done? Right? It has spent the majority of the year above the open. That is bullish. If you look at this thing, it's been overbought on the daily time frame many times. That is not bearish. That is bullish. So everything about this trade screams that we're probably going to see a breakout to the upside unless the BOJ does something. So how can you trade it? You can wait for support. All right, so the numbers came out. We really ain't seeing nothing happening. Let's go over here and look at pound dollar. All right, so this is where we want to look for the short on pound dollar right now. So go ahead and I'll go ahead and take that short. I'm going to give this a wide breadth. All right, 25 pip wide spread. Make sure you're only risking 1%. It is so easy to do. There's the setup. All right, that's the setup. So let's see where the dollar is. I don't care what the numbers are. The numbers have already been priced in. This first initial move is just going to make people think that, yay, risk on, right? But we'll see. We'll see how it happens. So obviously, if the dollar keeps breaking down, it's probably just going to go after that weekly low right there. I believe it is a weekly low. No, it is not a weekly low. So it's just a daily low, a 3-day low. It's just a 3-day low. We'll see if it takes that out. We got support coming in around 101 spot 67. As that is monthly support. Okay? Monthly support. So what we're expecting is we're expecting this thing to find support in the next day or so and then start reaching back for this ascending trend line. Now, I put another trend line on it that I had just deleted. I'll go ahead and put that back on there. You can see how you haven't gotten a daily close above that, right? So we'll see. Like I said, don't ever think that the first move is the last move. We'll see how it comes out. This came in line a little bit lower, actually. Wait, didn't this say 4.7? I'm pretty sure this said 4.7. Well, anyways, we hit 4.7. Here's the initial jobless claims. They were expecting 230K. We got 248. And then core up 3.2, just like I said. Based on oil alone, that's the reason why that number is up. So, yep, we're expecting support to be found. We're expecting this to roll over. You can see how that trade was almost beautifully hit to the perfection. All right. We know what we're doing over here. Let's go check out Bitcoin. Bitcoin gets another spike up to daily res. You can short it as far as I'm concerned. It is holding support right now. It is looking like it wants to be a buy. But this thing, every time I have tried to buy it, it has disappointed me. So, I mean, it is bullish on the weekly. There's no reason to say that you should, absolutely be expecting it to go lower. This is a bull flag on the weekly. You never did get back above, or it never did hit back to oversold. So that is obviously bearish divergence. However, I don't look at these things in terms of divergence. What I look at this is what happened. We traded down to the 50. We found support there. We got a bounce. Was it, even though the candle is so much more massive compared to this one or this one or this one, it still doesn't have the momentum that it should. Hence the pullback. Okay, this suggests that there just isn't as much bullish momentum as there was on the first time that we broke above the 50. Then we came back in for a retest twice. This was nothing more than a stop run. It was probably done on an FOMC day or some shit. Then you broke up to the upside. So there's your weekly on Bitcoin. You've already taken out the weekly high, and you do have a higher low on the weekly. So typically, this would be looked at as a bullish pattern. You would be looking to buy this thing at the same price I've been telling you guys to buy it at for weeks. That is the yearly supply. 28,990 yearly supply. So if it's going up, you want to buy it at supply. If you're bearish, you want to sell it at resistance. All right. It's been trading on its own merits. It has not been inversely traded to the dollar. It's not inversely trading to risk. It's doing its own thing. So literally, Bitcoin is trading on its own merits. It's trading on its own supply and demand. It's not trading with risk assets, and it's not trading inverse to the dollar. So that's important. Because it's been like that for a while. Here on the S&P 500, you can see that we have a very small week. This down week looks bad, but it's not bad. It is not bad. This is not bad. All right, don't think that is bad. If we just tag this to the open and go to the close, you are down 2.23% on the week. That is nothing. Nothing. In fact, we will go over here and we will pull up the SPX. Let's maximize this pain or sell, whatever it's called. We'll maximize that. And I'll bring it over here and I'll show you. Here is the expected move for this week. Here's the expected move of this week. So as of yesterday's close, you were just trading at the open. So from this is your open. The black line is the open. Why? Because it's the close of Friday. That's how the black line is measured. And then whatever the expected move is in terms of dollars up and down, because that's how the option market prices it, you can see that you're just barely breaking below the open of the week. So essentially, the S&P 500, even though it's Thursday, is unched. It is unchanged. But you can just simply look at that. Now, this tracks the futures. That was just the S&P 500. All right, you can't trade this asset. You can only trade options on it. So that's the SPX. This is actually the E-mini futures. That's what this tracks. So you can see that you are not back under last week's close. You are above it. However, if we get back up to this area, this would be where I'd want to sell it, or I could potentially even take a short on it there, right? But I don't want to see any 2 hour, 1 hour closes above that line if indeed I do expect it to go lower. All right, I did close the short position that I had on the S&P 500 via options. I closed that position out. I'm only holding 2 positions right now. The reason why is simple. I took a trade on CELH, which was a short call, and that thing absolutely exploded to the upside on earnings. Yesterday, we had a nice move to the downside, and I put my exit order at the midpoint, and as it got down there, it did not fill me because there's not much liquidity in the asset. So here's my short call right there. So as you can see, it's starting to look pretty bad. Yesterday, this thing was down almost 100% based on the implied volatility, based on the fact that the in the money was right close to that short call there, right? Now today when it opens, I expect the implied volatility to drop, and hopefully price will drop, or there's enough data decay that has happened since I took the position that today will open with the ask around $60. That's what I'm hoping. Obviously, it doesn't mean it'll work. I am fully prepared to take a complete and total loss. If you look up there, there is the year-to-date P&L showing a loss, because the last time I showed you this account, it was up $250. So that's pretty much showing the loss right there. And also the UAL short that I am still sitting in, United Airlines, it is in a loss as well. But this was high. This was up into like 30s yesterday. Today it's down. So it's moving in the right direction. I have plenty of time on that, so I don't have to worry about it. And the risk is defined on that trade. The risk is not defined on the sell trade. So I might have to take a loss on that, but I'm okay with that. That'll free up my buying power. That trade required so much buying power to do, I shouldn't have even done it. You see this? I should have at least $5,000 in buying power if I'm out of all positions. If I'm in a defined risk trade, then it just takes the amount of buying, however much premium you paid for it, that's your buying power. You can see that this thing took almost $4,000 worth of buying power to open, right? This is only a $5,000 account. Now I can't trade Tesla like this or any of the other ones, Nvidia, any of those, because you got to have like $15,000 in this account to be able to trade that. Now, on Thinkorswim, you probably need like $280,000 to trade it. So there's a much better reason to use tastytrade than there is Thinkorswim. And if you get approved for everything, you can trade futures, you can trade options, you can trade whatever on this platform. You can trade stocks. I have $3,000 worth of buying power on stocks, but once I close this position, that'll jump up to like $8,000 or $9,000 of buying power. So it's pretty good. It's a pretty good platform. I mean, it's not quite 6x, but you don't need 6x. I'm going to show you just how fast and easy you can grow these accounts. Let me get this off the thing so I can see if there's any questions. How are things going? They're going good. How are you doing, Ricardo? Good morning. Good morning. Good morning, Ed. Good morning, Bravo, Ray. Crypto Trades and Tech, Brandon, thanks for being here. Tom, you guys freaking rock. All right, so that's what we got so far. Our pound dollar trade, we can go ahead and take profits on this because we're 2x. You see how I was risking $452.55 with the stop? I can go ahead and take profits, 2/3 of 189, which is one lot. It's almost two lots, but it's just 1.8 lots. So we'll use the calculator to do this. We'll go 189. Shit. I suck at calculators, obviously. 189. What we got? 350. And we'll divide that by dose. So we want to leave 94,000 units on. Right? 94,000 would be 2/3. So we could close out like 95K. That wouldn't be right. That doesn't seem right to me. No, it has to be lower. 2/3, 200, that would be like 75. Let's just close down 100,000 units, leave 89,000 on. It'd be like 2, right? The way I'm going to do this, I'm going to say buy limit order. All right. This is how you set a buy limit. I'm going to set it at one spot, 27567. Wait, what's this? That's the units. Yeah, that's what I want. All right. So I want to set this limit price one. What did I say? 27. Let's go 575. 575. And then we want to take off 100,000 units, which is just one lot. And we just set buy. Now, if this doesn't get triggered, that's 10,000. All right, you could just mark it out, but I want that full one-to-one risk to reward ratio, which it does have it. I mean, 452 would be what? 902. So we'll get it. I mean, we'll get it later on in the day. This is a freaking massive rejection. This is exactly what we were looking to happen. All right, limit, and then 127,575, and now you hit the buy button. So if this gets down here, this will take me out of the trade with 100,000 units. I'll have 89,000 units left on the trade. That's how you take profits. It's as simple as that. Or you could just mark it buy. Like I can mark it buy right now, and it would take me out like up here, which wouldn't quite be a 2-to-1 risk to reward. And we want that 2-to-1 because it's important. Because a lot of people think that you can't do this and you can't do it often enough to make money, and it's just horse crap. Because I do it all the time. All the time. It's better than a 2-to-1 risk to reward. 2.27. So we'll see if it bounces. Obviously, I'll watch the close on this hourly. We got 15 minutes left on the hourly. If it closes above this, then I'll go ahead and take whatever profits I have by a market order. All right? And then just move the stop to break even. One could do that now. So that way, no matter what, you don't lose on the trade. But I think with all the level 5 data prints that we had coming out today, I mean, initial jobless claims, CPI year-over-year, CPI month-over-month, core CPI month-over-month, core CPI year-over-year. This should be a 3-star event as well. I don't know why it isn't, but it should be. I don't know why they say it's moderate volatility expected. I mean, that's good for us. That's less. That's probably not good for the dollar. Yeah, a lower than expected reading should be taken as negative on the dollar. Higher than expected number on this should be as positive for the dollar. So you got two different things going on here with just inflation. You got a lower print on core, a higher print on this. But we knew this. Anybody that's worth their salt in trading knew this was going to happen. Like, this thing doesn't give me forecasts, right? It doesn't give me forecasts till like the week of. And I can show you where I posted is like on Twitter 2 weeks ago, 3 weeks ago. When was it? Well, August 4th, to be fair. It's not 2 weeks ago. Not quite. But still, that's just saying that, we're going to get it. And then I showed you the reason here that, it raises every $10 a barrel increase of the price of crude raised inflation by 0.2%. So we got triggered out of the trade, and we still have what we were risking left on. So if this rolls over, this is not just a day trade. I'm not looking for this to just be a day trade. I'm looking for this to be the top, if you will. The top. We had a beautiful setup. We were under the RSI on the daily time frame. We were under the 21 on the daily time frame. So anytime you trade up into that, you look for areas of potential liquidity grabs, which we got right there. We traded all the way up to here, which was what? You saw me mark it before I started speaking. It was the last week's close. Or not last week's close, just weekly support. It traded right up to the Heath level. That would be supply on a weekly basis. Right up to it. Okay? And you can see just how fast that thing dropped. Quickly. A lot of selling taking place up there. Not just me, right? I'm not the only one that does this. There are smart traders out there other than me. But you can see that just boom, boom, boom. And if I show you over here in the Discord real quick. Sorry. So yesterday, right here, yesterday, 857 pound dollar I just need an entry. It came at the London Open. That was yesterday's trade on it. So here's today. There wasn't much said after that because here we are, August 10. That's today. It's going to break out more than likely. He's talking about USD JPY. Sorry if I'm doing this to you guys, but I just want to show people. I'm watching pound dollar for a short. That was at 8:05. So 30 minutes before we even got the news, I was looking for that. And I got it. I already made money. The trade is done. It can go up and stop me out if it wants to, and I made $450. All right. Now, my real actual trading account is a little bit bigger than this. This is not a real trading account. This is a paper account. But it works the same. It wouldn't be no different. I already had a limit order setting at the weekly Heath level on my other account before I even started the live stream. So I'm filled in that on my real account as well. Only a little bit bigger in position size. But you get the picture. That's all I'm trying to show you. Like how easy is it to trade the news? Everything that people say, stay away from, avoid, don't even try it. Well, I agree with that sentiment if you're new. But if you're not new, if you follow me, I give you the permission to trade the news. Be in a position and out of position in 20 minutes. Days done on Forex. I haven't taken a trade yet on Forex. I've been waiting for my position, for my entry. So yesterday, what I was referring to is the top came right here at the London session open. How many times have you guys heard me say that crap? Like you could literally build a strategy around just selling the London session high or buying the London session low. The open, of course. Look at this wick high. What time is that? 3 a.m. in the morning, U.S. Central Time. That would be what, 10 o'clock London time? 9 o'clock, 10 o'clock? I don't know. I know 2 o'clock is the actual open. So I like to watch that 3 o'clock candle. If you're making freaking daily highs, which you would have been, right? I can simply, here. Never mind, you get the point. Just ignore all this, right? Because this is all of yesterday's trade up into the close. So, but that's your short. It's making a fresh daily high at the London session open. Short it. Does it work every time, Heath? No, it doesn't. That's why you got to use the stop loss. That's why you use the same amount of leverage, the same amount of risk, the same amount of everything. But this happens more than 60% of the time. If you don't believe me, you can go find out for yourself, which I strongly suggest you do. Don't take anybody's word for it on YouTube, ever. Go check it yourself. Check what they're saying, and go see for yourself if it's happening or not. So here we are. We'll see if resistance is able to hold on a daily time frame. But like I said, I'm not looking for this to just be a day trade. I'm looking for this to roll over, similar to the way I short the Aussie dollar. Right? Where was the Aussie dollar short? Right there. Right on that bullish candle. And I damn near top ticked it as well. Because there was a Heath level on the daily time frame. We were coming up. We were testing the 50 on the RSI. We were testing the 21 on the daily. This was also happening on the weekly time frame. This was happening on the weekly as well. You were also testing the 21 on the weekly. You were trading under it. You were coming up, testing it, and you were coming up and testing the 50 on the weekly. That is a trade I will take 100% of the time. Will it work 100% of the time? No, but I will take it every single time. I'm still sitting in this position short, right? With just a small amount of money because I took profits, obviously, on the next day when it moved rapidly lower. And I had to wait till the next day because I wasn't quite in a 2-to-1 risk to reward on the close of that candle. So I waited till the next morning. When I woke up, I seen that we had a nice move down. I just went ahead, took profits, and I'm still sitting in it with a tiny position to see what happens. We got a yearly low sitting right there. So Aussie dollar is generally looked at as a risk on asset. So if it's doing good for the year, typically you would expect stocks and your index products, the NASDAQ, your Russell, NQ, whatever, SPX, and the Dow Jones all to be doing good. When this asset is not doing good, then we typically look for those things to be struggling. Well, that's not happening this year. It usually happens, right? It's usually the way it works. If Aussie dollar's having a bad year, so is everything else, right? June. Well, we rolled over in November 2021. Here you go, October. You did have a run above the highs there, so that was a stop run. But after that, I mean, boom. You could have been sitting in this for the entirety of the bear market, 2022. Now, Aussie dollar typically does trade down. Like if you look at this thing on a yearly, it's not been doing good for the last couple of years. So we'll see how it goes, though. It's just about the trade. The trade has already made money. So if I get stopped out, it's no big deal. I already got paid. It's done and over with. It's in the past. It is a taxable event. This will be a taxable event, right? Taxable event. So I didn't set a stop or a take profit on that trade on the actual real account. So I need to do that. I can do it over here on this other screen. Give me 1 second. They set a take profit on that. I wanted the same price. This is a Oanda. No, this is forex.com. Shit. Let's go to Oanda real quick because I got to see that price on Oanda. I wanted it. Oh, damn. That's the 2019 yearly open. So it might bounce here. We'll see how it plays out. I mean, failed there, it failed there, it failed there. It's going to fail here probably. We'll see, but I need to get this price locked in. 575 is too low. I'll take it at 602, which is yesterday, or this hourly candle's close. Low. Oh. One. No, just delete. All right. 602. Done. All right. Let's go. Any questions? Anybody? Good afternoon, says Michelle. Good afternoon, Michelle. Here's your oil. Let me turn this fan on. I'm sweating. I never thought just talking would make someone sweat. All right, so here's the oil. This is what I'm talking about. There's 2023. This thing is mooning. Like, I wish I would have bought that. That's out of monthly support. No, it was at monthly support. No, it was. It's right there. Sorry. That's the monthly support that I was looking at. I should have bought it, but I thought oil was going to continue to go down. At the beginning of the year, I actually thought the China Open was going to make oil climb, but it didn't, and it ended up rolling over and going down and setting fresh yearly lows and then taking those lows out. So it looked like we were going to see downside continuation, but right there, that candle's high is the yearly high on oil. Right there. Not there. There. That's your yearly high on oil. 93.73. You take that out, you're going to have a megaphone pattern, which is typically looked at as bullish because you ran through it and then you come back out to the upside. You see that work happen like every single day in the markets, right? You come down, then you go bullish. You go down, then you get bullish, right? Go down at the beginning of the open, then you go bullish for the rest of the day till 1 o'clock, and then it dropped. It looks like there's some selling pressure happening on it, but we can't be too sure. Now there is a way that you can trade options on the S&P 500 by selling it. You just buy a put higher. I mean a call. Sorry, you sell a call and you buy a higher call. And if you don't have much money, you can do that on the MES, which is a small. Oh good God, I hate the Tasty Trade. If you're listening, you need to fix your internet platform as well as your downloadable platform. They both suck balls, like terribly. It's pathetic bad. I always get logged out. I always see that expired session. Like, and that really sucks when you're trying to close a trade out. Sorry. A little bit of anger on that, but you get what I'm saying, right? If you're trying to close a trade out and that was to happen, you'd have to go back in, you'd have to log back in, not just to the platform. You got to go log back into the whole account manager. And then you got to log into the platform. So it's double login just to get back into it. And I have two-factor authentication going on, and this still happens. I could pull up the platform right now. I have Thinkorswim pulled up. Like all the programs that I'm running on my computer are like main programs that have to run in the background. And I got Discord open. I got Google Chrome open on 3 monitors with multiple tabs. I have Thinkorswim open. I have OBS open. I can open 8 more programs. But for some reason, Tasty Trade just doesn't work. All right, so let's go back over here. And let's look at the SPX. So I can show you how you can short this thing. You want to go way out of the money. Way out in time, sorry. Typically, I look for like anywhere from like 50 to 100 days. So you could take any one of these. I would probably take the 70 myself. So we just go in, we open up that expiration, and it'll bring up all the options. Make sure you have all selected, wherever that is. Right there, strikes. All right, you want all of them selected. Here, let's put it this way, up, so that way the calls will be up here and the money goes lower and the money out of the money. It should go higher. It does go higher, my bad. All right, so like go to like the 49s if you got the they don't have 49s. Yeah, they do. I missed it right there. You could sell it at 380. I would try to sell it at 395. Get in the middle there, 395, receive that credit. And you can come all the way down here and like buy the 50.25. That will cover your risk. That will give you a defined risk trade. And the money that you can make is the width of the spread. So from 4,900 all the way to 50.25, that's a $125 wide spread. That's a wide spread. I probably wouldn't go that wide. Because you're still going to be paying a hell of a premium for it because you're only going to receive $1.10 to pay for that short call. But that's how you can short it. Or you can just go out there and buy outright puts. All right? You can just buy puts. Out of the money puts. So here it is in the money. It's going to be up here. Right in there. I'd make sure that your probability of in the money is going to be higher than 35%. So I would look at like the cheapest one. You can do this on the SPY. You don't have to do it on the S&P 500. I'd take like this one right here, as there's only a 36% potential profitability. But if price goes down, the implied volatility is going to go up. That's going to jack the price of your option up. as well as price heading closer to your strike, which makes it go, the price go up and up and up. So if you go out far enough, you don't have to worry about time decay. That's the whole thing. That's the whole reason of going out 70 days. Like if you pulled up the time decay on this thing, there is no volume on it, but trust me, there is open interest on this thing. There's a lot of them at the 44.50 strike, but what was I going to do? Oh, theta, which is time decay. That's not right. It's because the market's not open. You're not going to lose $52 a day because that's not right. Maybe it's cents. It still probably ain't right, but it's cents. It's not dollars. You're going to be losing like 40 cents a day on it, 50 cents a day on it. That's not as bad. But like I said, this isn't right because the market isn't open. Don't ever trust pre and post market numbers. They're not true. They're lies. They're liars. The oil is not lying. It is breaking the F out. I wish I would have bought some oil contracts. Wish I would have, but that's all right. I'll get it on the pullback. I need a little bit bigger of a pullback. We had a nice pullback on it the other day, like right there, but I just didn't get involved. Simply because like when I like to get involved early on the move. This is late on the move. I mean, you've already closed an entire month moving up. All of July. See, that's your July month right there. That's the month that was just now priced into CPI, the headline number. So this month of oil is the reason why you got a 3.2 and not a 3 point lower, like a 2.8, 2.9. So this is what everybody was afraid of also. Let me just say that, right? Everybody was all happy when inflation was going straight freaking down, but as soon as it pops up, people will start to worry. They'll be like, oh shit, the Fed's going to have to hike more. Maybe they don't have this under control. We know that Europe's not under control. Their inflation is going out of sight. Especially the pound. Like the pound's inflation is terrible. I think it's up above 7 still. Like, still. And this all happened from the same pandemic that screwed our economy up. And that was right there. Remember that? Oh man, if you could have bought oil and negative numbers, I doubt your broker would allow that. But if it did, holy crap. Holy crap. This was the best trade since the pandemic, not Bitcoin. This thing outperformed Bitcoin like you can't even imagine. I'm talking thousands of percents to the upside there. And Bitcoin only moved up a couple 100%. Well, no, it didn't. Not from the lows. This low here. All right, so it almost got 1,000%, but oil's thousands with an S of percent. But yeah, it's been fantastic. That was the best trade of that year, no doubt. No doubt. I did partake in it, but obviously that position is gone. Okay, so Bitcoin is now rolling back over. I wish my ears would quit popping. I must have a cold. So it traded up to hourly res and rolled over. So far. You did close a higher hourly candle, though, from this candle. So this is your move to the low. That's your low. There's your bullish push. Then you get a bearish reaction up there. And then you get the news, which is just to run everybody stop. So wait till after the news before taking a position on it. I mean, you could have entered right there even. I do like it to the downside. I had a short order in, but I got stopped out. I took it days ago, though. I took it when we had that strong move to the upside last week. No, it was this week. Right here. I took the short in here. But I got stopped out yesterday. Right here. My short was like under this right here. Like on this trade, when this candle traded back up into that, I took the short. And I was using a lot of leverage because it's a very small account. So I couldn't get a stop very far because of the leverage. If I would have used my stop up there, I probably would have got liquidated. A lot of leverage. So this stopped me out, and then it rolled right back over as usual. Even pros get that stuff happen to them. It's not just you. We think we know what price is going to do, but we don't. We don't have any idea. We're idiots. We don't have a freaking clue what price is going to do. There's no method alive that will tell you what price is going to do. I mean, I do pretty good on guessing just with the knowledge that I got. So you can too. Come on, guys. Let's get some questions for the market opens because I got to get out of that trade. I got to focus all my energy on getting out of that one trade, trying to minimize the loss. I'll just pull it up over here on the charts, and then I can watch it. And we want, oh, you son of a bitch. CELH, which is a Celsius drink. Yeah, it's up to 174.10 this morning. Pre-market. 174.10 is going to put it really close to my, too close to comfort. Too close to comfort. I mean, the bid-ask spread on this thing on the stock is freaking terrible. Look at that. You got over a $3 wide spread on that. I should have never took this trade. Even though it was high probability, I should not have taken it simply because the liquidity is shit. I should have got filled yesterday on that move to the downside. Should have got filled on it. Right here. These are the hourlies. We got to get off the hours. Go to 15 minutes. Not this first push lower. This second push lower. I was looking at 162. Once we got in the range of 162, that was a profit-taking trade. So I had set my stop. I had set my limit to get out of the trade at the midpoint so I could make like 15 or 20 bucks instead of it being a massive loss. And it didn't fill me, and then look what happened, right? That shows you, like, I don't know what price is going to do. If I did, I would have never taken that trade, right? I would have got long right at the close. Nobody knows what price is going to do. I think the reason I took it was because they never had a move that big before. Like, they never had a move that was like over 25%, and this was over 25%. So I sold the call somewhere in here. So let's just use that close. You can see I'm 26.82% away from near-term price. This was just a massive move to the upside, and then all post-market, pre-market traded up. And then yesterday, I did not get filled. I missed that wick by literally a second. The thing was moving. The bid-ask spread on the options was moving so fast. I was watching the ask only. I don't care where the bid is. I want to get out on the ask. And I got to get out on the ask under 67 cents. So whenever the ask hit 60, I put that get me out. And it didn't fill. Oh well, I'll close it today or tomorrow, depending on how it trades today. If it gets closer and closer to 180, I'll close it. I'll just take the loss. It won't be as big of a loss as it was yesterday, though, based on time decay. There's only 2 days left on that option, today and tomorrow. But if you look at tastytrade, it's going to tell you there's only 1 day left on that option. Days open, days to expiration, 1 day. So for some reason, they don't count today. It closes tomorrow at the market close. This option will expire worthless if it's trading under 180. If it's trading above 180, that makes the option have extrinsic value, which sucks. But oh well. J Powell is calling. Has heat? I've got a question. What is your main FX broker? I use Oanda. That's my main account. I have a small account on FX.com that I've been trying to grow. All right. Those are my only two FX brokers. Forex.com has a really large spread on like your NZDs and your Swissies. Like I think NZD Swiss franc has the widest spread. Not NZD Swiss franc, sorry. Yeah, NZD CHF. I think that has the widest spread than anything else on the platform. And that's only counting the majors, guys. I'm not talking about trading Mexican peso or Bavarian unit or whatever, right? Whatever other currencies are out there. There's a ton of them. Like if I just go to my Forex, this is my watch list on Oanda. You can see how many pairs there are at trade. That's the Chinese yuan. I do trade that occasionally, but the spreads are terrible on this. Look at that, 15 pips wide on the spread. So whenever you start getting in the trades that have a spread that's massive, 77, 82, like 72, 60, like you're looking at a 20 pip jump right there just in ticks. Each time this thing ticks, you're dropping 10, 15 pips. Yeah, you don't trade stuff like that. I don't. You can. You just gotta do your math right. I've traded this one a couple times. It's got a massive spread. But this is a Hungarian forint. This thing just goes down. Mexican peso is actually beating the dollar. So I think this is going to be a buy at some point, right? Right? I mean, the peso's not beating the dollar. How's the peso beating the dollar? And it's not, it's the Mexican peso. It's 17 pesos to $1. That's the exchange rate, but still, I think the dollar is going to rebound here somewhere. So we got to find a support, and we can look for a long-term buy on this, potentially. All right. But like, it looks like everybody's trying to buy it. That's why it keeps going down. If the majority is long this asset, it's going to go down and down and down until eventually it finds support. And I think it will find support if the dollar starts to strengthen up. All right. So those are my two main FX brokers. Oanda is my main. FX.com is my secondary small account. Can we check Roblox, please? Yeah. It's under its open, like it's IPO. Initial price offering. It's not doing good, bub. Sorry, bub. I watched the Wolverine movie the other day, and now I'm calling everybody bub. Did you call me blob? No, I didn't call you blob. I called you bub. Anyways, it's gapping up pre-market, but you can see what happened yesterday. Earnings. It was a miss. Pretty big miss. Almost 1% on the revenue. Right? Is it make money? That's the question you got to ask yourself if you're looking for an investment in Roblox. Do they make money? This is a free website. They do not pay me. It is free. You will get a ton of pop-ups, but it is free. Whenever I run my VPN, I don't get these pop-ups, but I can't run my VPN when I'm live. I need a new VPN. No, they do not make money. They're $1 billion and under. You see this? That's 1032.5 million. So that's $1 billion. $1 billion is their income. Negative $1 billion. They do not make money. Now, if this number starts to tick up and it gets to like $900 million instead of $1 billion, then it will probably start going up. I don't know what this company is. I've heard it a lot. I've traded it a few times. I just don't know what it is. Roblox. Have no clue what that is. Is it something like Clorox but different? That's a joke. I think it's some kind of gaming stock or something. I don't know. But it's not looking good. I mean, on the weekly even, it's going to look bad. Yeah, it just broke down. Like, that would have been a beautiful short right there. Beautiful short. It would have been exactly identical to the Aussie dollar short I took almost. Let's see. Well, not quite. It would have been on this week here because you gapped up on Monday. You traded up a little bit. Just wait for it to get back under the old weekly support and just hit the sell button. Stop above that high. Boom. Of course, that's in hindsight, but that's how I trade. I would have taken that 100 times. I told you that earlier on the other trade. This happens on everything. The 21 exponential moving average is pretty much the mean, right? It's the mean. So when it's trading in price is pretty much where it's supposed to be. And then all of a sudden you get bad earnings and everybody sells. Not necessarily shorts. This will tell you to short float as well. It's got a low short float. So this is legitimate selling. This is people who own the asset. They're just selling. There's nobody shorting it. 2.97 on a short float is nothing. It's not big until you get like above 15%. Then that's when you have a big short float. This is not enough to make any kind of squeeze anywhere. It's just actual normal selling going on from firms that own the asset. They're just selling it. They're just getting out of it. Right? And that's worse than shorts, because shorts can be beaten. Shorts can be beaten. You can beat shorts. You just got to GameStop proved that, right? GameStop. What was the other ones? Bed Bath & Beyond, which, if you don't know, Bed Bath & Beyond is now owned by a .com company. Shit. I know the name of it. Overstock. Overstock.com bought Bed Bath & Beyond. I don't remember their stock ticker. I think it's OSTK. Yeah, Overstock. You can see they got the rise. That's because they bought Bed Bath & Beyond. And so far, people are liking it. Roblox, man, leave it alone until it finds support, okay? If you're wanting to short it even, you got to leave it alone because it's oversold. You don't want to sell stuff that's getting close. It's not quite oversold yet on the weekly. I guarantee it's oversold on the daily. Yeah, I mean, it's puking. Blah, barfing. So wait for it to pull back, maybe even fill the gap. And then if you want to short it around that Heath level right there. That's your last highest out closing candle before the drop. That is supply. So 37.08 be a good spot to look for shorts. If you want to buy it because it's cheap, then don't use any leverage. That's all I could say for investment advice. Literally. I mean, it's cheaper than it was, right? It was up to the 140s. I'm not saying it'll ever go back there again unless they start making money. If they start making money, it will. Their earnings tells you the case. Like, they've literally, since they've been publicly traded, only nailed 1 quarter earnings. And it looks like they still sold into it. No, you gapped up. But then it came back, filled the gap, and then you got a nice little up thrust, but only made it to resistance and then rolled right back over. This is just people selling. They just sell. They wait for a top, they find resistance, and then they just sell it. And then you get this dump. And then it goes back up, and then more people sell. And then you get this dump. And then they lost on earnings, so everybody just said, screw it, this thing sucks. I'm getting out. Screw you, Roblox. You're on your own. Just kidding. Can we check? Yeah, we just checked that. Tesla, TA, please. Got you. Yeah. Yep. Kind of figured it. I mean, this gap wasn't filled. We don't trade gaps, or we don't look for gaps to get filled, but it just didn't. Ran up to monthly res and dumped. And then right through here would have been the short opportunity. Right through here. Anywhere in there. As long as you're under. See, here you close the daily above it. But then the next day you gapped up and sold off. This day you could have sold it. And if you put your stop above that day, since it gapped up there, you would have been safe. And since Tesla's a high beta stock, I mean, this thing moves. It requires a ton of buying power if you're trying to trade options on it. If you're shorting options, if you're just going long options, it's just whatever you pay for the premium is your buying power. It looks like it's at support, but I mean, it's bouncing pre-market. But as long as it's trading dailies under the 21 exponential, I think it's going to go lower. Right? I mean, of course, there's the 50 and the 100 and the 200 and all that. But I mean, once you get under the 20, that's when we start looking for shorts. They don't always work, obviously, because it could be making a bear trap right now. Right? Because here's the 50, traded under it, boom. Then you finally, yesterday, you got down there. This morning, you're gapping up. If you close the daily above this price, which is 249.70, any pullback into that price, you could be a buyer. Stop under this low. And up into here, just back to July's open, would give you a 3-to-1, almost 4-to-1 risk to reward. Using this as your stop. This is your entry. We can even measure it. That doesn't mean it's going to work. It never means it's going to work. If we buy there and we use this as our stop, I mean, just the low right there is fine. Yeah, you're going to have an 8-to-1 risk to reward just back up to resistance. July's open is going to put you above 10.59%. That is not a bad trade. Now, will it work? I don't know. We'll see. If it closes dailies back above 249.70, then we might think about it. We might think about buying a call on it or something. And only looking to gain a couple bucks on that and then get rid of it. But it looks like most tech right now. See? There's your tech sector. Tech sector. That looks like a top, don't it? It does. It does. But you got to get above 173.71 on a daily closing basis before you can even look or think about going long this asset. However, if this is a bear trap, then you could potentially get long to trade it for this potentially being a bear trap, right? You would just simply, at the open, see if it starts to go up or does it go down. If it goes down, watch the close yesterday. 168 something. I would get long there and I'd use yesterday's low to stop. Just as a trade on potentially this being a bear trap. All right. And it's the same on Tesla. I mean, this is almost exactly the same on Tesla. The only difference is, obviously, Tesla isn't quite above the 50 pre-market. There's your 50 there. Pre-market, you're at 245.16. So we'll see. We'll see what happens. But like I said, if I don't know, guys. Like, if there's fears of recession out there, which those recession fears are going to grow if the headline number keeps going up. It's the same thing as I said at the very beginning, back in June, at the top or the bottom of the market, if you will. As long as inflation trends lower month over month, risk assets will go up because people have to invest their money. They just have to. That's their job. They can't sit in cash. Right? They got billions of dollars under management. They got to do something with it. So any 20, 35, 40% pullback on your favorite asset is going to be a buying opportunity. But now, with inflation ticking up, which we knew it was based on oil, as long as the core inflation starts to come lower, then this is probably going to be a bull market bounce or a pullback, if you will. And you can look to buy. But we just got the inflation print. So we got to see how the market reacts to this going forward for the rest of August until September when we get the next CPI print. As of right now, we're pretty much on the short side of the market. As of right now, that could change. The XY closed 1 hour holding daily support. Yeah, I figured it would bounce. I just did. I mean, it still looks bad. I mean, it still is. It's red on the year and everything. But the way this thing just immediately took out, like, you almost took out all these downside gains. Like you did. This wick almost trades into that candle's support. So you literally priced out this entire down move. Right? This is the breakdown. Look at this wick. Like it trades into this candle. Right there. You literally took out this entire downside. This hasn't been priced out yet. But I mean, this was a fabulous move. We capitalized on that. Nice. It's beautiful. But now I'm not so sure because of this. The price action is telling me like this should have reversed at the monthly support if it was going to have downside continuation. Instead, it closed above monthly support. And the month of August has already traded up to the month of July's open. So, I mean, that doesn't look like downside continuation. Can it continue to go lower? Absolutely, right? It is still structured bearish, minus the descending wedges that I kind of got going on here. Take those away. This is structured bearish still. But that tells a huge tale. That's a monthly. I rely, like monthlies are huge. They're huge. I mean, that was ridiculous. This thing should have just traded up around 101-ish and then rolled right back over because of how weak that was, how the bears just annihilated it. Boom, 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 boom. I mean, the last two candles were big, right? Boom, boom. That looks like you're going to see downside continuation. But we didn't. We broke out above, closed above monthly support, and now we're trading in a descending wedge. Now, this descending wedge is going to differ depending on who puts it on, obviously. Trend lines are very subjective in that manner. Right? Because if someone puts their ascending wedge on a different high than I do, then they're going to have a complete and total different. See, like even this was a close under monthly support. And then the very next month, boom, explode to the upside. And then same thing. It's like, it looks like accumulation more than it does selling, right? But we'll see how it plays out. Let's go check the hourly. Yeah, it bounced right off of monthly support. That means that pound trade should be looking pretty damn good about now. Ooh, doggy. Look at that. Beautiful. It's just another trade, guys. It's just another trade. Just another trade. XU100. I'm assuming that's the Euro NASDAQ. No, it's Turkey, I think. I don't know what BIST is. It looks like it's... Yeah, I told you to wait for a support text. You haven't gotten it yet. It's just moving to the upside without concern of the shorts. This thing has been overbought for so long. On the daily, it's going to be overbought on the weekly. 3-day. Yeah, you're overbought on a 2-week. Monthly. Jesus, this thing is flying. Yeah, I don't know what's going on with this. I don't know what's going on with that. Yuck. Ugh. Let's go look at it. Jesus. Wept. Come on, crash. That thing opened at 175.22. So what we're going to do is we're going to watch the ask here. We want to see the ask get down at least around $75. That's what we got to do. Doesn't look like the options are trading yet. Look at that freaking spread, dude. I should have never taken a trade based on the liquidity. Based on a liquidity alone. Let's go ahead and put One at 60. Lock that price in. Just see if we can get out with a small loss. Obviously, that means this ask has got to come down to like 70 in order to get filled on that. Price is having a nice down open, but that doesn't matter. This thing is uber bullish. There's the chart. All right, so there's just nothing you can do on this asset. I don't want to tell you to buy it. It's so overbought. It's overbought on the monthly, man. But I mean, that's just showing you how bullish this thing is. Eventually, it's gonna have a blow off. Eventually, when, where, I have no clue. But I still stick to this support down here. You've also got a couple other support levels that you can look for buying opportunities at. I mean, if you'd have just bought the close this day, you would have made money. If you bought the close that day, you'd have made money. If you bought the close that day, you'd have made money. But it's just so overbought. I wouldn't touch this. I wouldn't touch it with a 10-foot pole. That's just me. If you live there and this is your market, then I understand. But it's got to pull back, and you can't short it either. It's just mulling shorts over like nothing. Like every day you get a bearish candle, you get a bullish move. It's just something that I wouldn't mess with. But 6605 is a support I would watch. I mean, you don't have any weekly supports in there other than the opens and closes of each weekly candle. 171. Filled. Boom. Where was it? It was the 180. See that? I got filled at 60 cents. I didn't take a loss on that trade. I took a $10 or an $8 profit. Nice. $8 profit. Trust me, that looks a lot better than a $200 loss, right? $200 loss. That's like 4x the account. That's not good. But I'm out of it with a profit. Thank you for moving down on the open. I love you. Mwah. That's too close for comfort there. There are no other earnings that I like. All right, these are the earnings. You can't do these. These have already done. They did it pre-market. I don't know how. Like most of these are not very. The options are not very liquid. I mean, Ion Q maybe, but it's also Thursday, so any premium that you could have bought or sold is probably diminished. If it's even, yeah, it's got weeklies. Not liquid at all. Oh, wait, 10-cent wide spread. There's a 15-cent wide spread. Look at the freaking, there is still implied volatility to sell in this, but not at where I would look. Wait, there's Delta. Yeah, I would have to be up in here to sell it. Even though it's Thursday morning, they're coming out with earnings today. So could we risk going in there around? No, you can't. You just can't. There's not enough premium to even risk losing that much money on. So, I mean, and I already went through the rest of them, and I don't like them. So we're gonna look for maybe a short on S&P 500. Let's get Ion or Celsius off of that because we're done. Look at that. Oh, that's not Celsius. Good. We can take the position off. We're out of XLF with a 30% profit, and we just took a $8 profit, which is like, I don't know, nothing. So we're still in the UAL trade. This is a bearish It's a bearish position. It's a put spread. Some people will call them bear put spreads. I just call it a bearish vertical spread with puts. That trade was down almost to the point where I had to close it. Since my account's $5,000, it says I made $42 today. That's not true. That is not true. Yeah, if this gets to $50, I exit the trade. Right now it's minus 11% on the trade, not the account. I wish they would do percentages of the account, but they just do it versus the trade. But $50 is my 1%. $51, $52. I don't know. Yeah, I don't know. $52 is my loss, 1%. So we'll look for something. Woo, S&P 500 moving, son. Man, if this was under, I would short it. But it's up, it's above it. And you're taking a short base solely on the moving average. I don't ever do that either. There's got to be a level of some sort. So if it gets back under 45.01, which is yesterday's open, I might take a sell on that. Or we could go ahead and get some more premium working. So let's go /MES because we're trading against the ESs. Let's go out 82 days. What's wrong with you? There we go. 750 times 5 would be what? It wouldn't be 750 there, 825. Max profit 37.50. So we can't do that one. Let's go down a few more strikes and see what we get here. There we go. That's more like it. Hey, what? Why is that moving? Let's go ahead and review that. Send it. Why doesn't it show me that it's working? There should be a W at the strike selected. This thing's all over the place. It could be my internet. I don't know. Any other questions? Should we have a fresh look at the Widowmaker UNG? Thinking about take profit around $9. UNG Widowmaker, huh? Where is your entry? $9 is a hell of a move. I mean, natural gas got absolutely destroyed. I mean, it was a good opportunity to buy it, but still, like, I don't understand why it was getting absolutely obliterated. Since oil is moving up, this is now starting to catch a bid as well. Where's your entry? I need to know your entry, because if you're looking to wait to take profits all the way up there, there's not a high probable chance of that happening. We can go we can go look and see obviously it's going to be many days out. $9 isn't even in the expected move for 43 days. See this little ruler looking orange thing here? This right here is your expected move. and that is just under $9, and you're 43 days out. So with the IV, the options market makers believe, right, that $9 only has a 22% chance of being in the money in 43 days. Now, if we go out further, like 100 days, that'll be different, right? But, I mean, I guess if you're willing to sit in it for as long as it takes, then we can look about how many days that would take, right? So we just did 43. Let's go out to 71 and see if $9. Yeah, it's almost 27% chance of being in the money in 71 days. All right. So if you're willing to sit in it that long, yeah, I don't see why not. But just know it could take up to 71 days before your profit target even becomes in the money. That's how you can use options to basically see if your profit target is a good. But if you just use trade talk method, then you're looking outside of the range. I guess, yeah, you're outside of that range. I guess it's okay. It's an okay profit target. It just depends on where your entry is. If you bought it at 6 or something like that, I would go ahead and take profits, at least 50%, right? So that way you've made money on the trade and your risk is gone. You just put your stop loss to your break even, and then you don't have any risk. And then you could just sit and wait, and if it blows up and goes all the way back to 12, you know what I'm saying? You won't worry about it because you don't have any risk in the trade. 6.5, yeah. Yeah, dude, you're $1.25 above entry on this product. This product hardly moves. Hardly. Like, if you just go to March, which is the third month in the year, it's taken all the way to October to get back there. I mean, August, sorry, to get back up there. So I would take profit. If it was me, I would take 2/3 off, put my stop to break even, and just let the 1/3% ride. And if it ends up going all the way back up to where it was, then you will make money. But this looks to me like it's going to be settled. It's one of those settled things. But like, it doesn't necessarily mean you're going to make money on it, because that after they resettle, it might be a different price. Why don't you just trade the actual? Yeah, see? That's a reverse split. Not a reverse split, a regular split. They keep splitting it because they have to. So that means this is a settled product. I don't know how often it's settled. Is it daily, weekly, monthly, quarterly? But it's settled. And whenever it gets resettled again, you might be setting that 774 profit today. And if tomorrow's resettlement and they resettle it and it gets back to 6, you're going to lose money on the trade. These things are not good assets to trade. But I would go ahead and take profits and move my stop to break even if I were you. If it was me, not if I were you. If I took that trade, that's what I would be doing right now. I'd be taking profits, move my stop to break even, and hope for the best. It is never going to get back to $34. Ever. Not this product. Ever. It'll be resettled or split again before it gets up there. But we got actual natural gas futures here. Right there. Right? And guess what? If you open a tastytrade account, you can trade this. I don't know what the ticker symbol would be. Yeah, there's not going to be. Let's try /NAT. There you go. You could trade futures or you could trade options on futures. I wouldn't trade the options. I would just trade the futures outright. How do you do that? You just go right over here to chart. And there's your chart, right? You can change the time frame. This is not TradingView, so it's completely different. It's their own charting software. But anyways, you get what I'm saying. All you have to do, if you hit trade, you can put this on stock or whatever off of options. See, a single, so this is trading this asset right now. I wouldn't even trade the options, right? How much is one? It doesn't tell me. Price must be in increments of for this order. Screw you, dude. Account doesn't have sufficient buying power for this order. That's one contract. Holy cow. I got $4,300 worth of option buying power, $8,000 worth of stock buying power, and I can't even buy one of these. Yeah, you could trade the minis. There's probably a micro one of these. I don't know what it'd be. Let's try /MNG. No results. There's probably micros. I don't know what you're trading it on, but I would take profits for sure. I don't trust that product. I got filled. Yeah, I got filled. Nice. Nice. And 100% of this would be $107. So we'll just set it in a way. And it didn't require a lot of buying power. I still have $4,300 worth of buying power. I could go out there and sell a couple more on like different products. I mean, 4,900 is, or 4,800 is where I sold it. 4,800. We're a long ways from 4,800. Always look at the ask because that's what it's trading at. So 45.83. I'll be able to close this way before it gets up there and make a little bit of money on it. And if the S&P 500 does roll over, I'll make money on it quick. So just be careful trading those resettled things, ETFs, please. I am patient. Good job. All right, good. We chatted about this. UNG is just a levered nat guy. Yeah. And it's also, like I said, you need to do research on it. Go see how often it's resettled. What is it? UNG, right? There it is. Let's just go look it up. No, not the University of Georgia. I should say stock. Energy issues shares that may be purchased and sold over the New York Stock Exchange. ARCA, the investment objective on daily changes in percentage terms of its shares. See, this is what you got to do before investing in any kind of fund, ETF. Go and make sure, even if you know it's levered, just make sure you know when the settlement is. When do they settle? How often does this thing settle? Investment objective for UNG is for the daily changes and percentage term of its shares NAV to reflect the daily changes and percentage terms of the price natural gas delivered by Henry Hub, Louisiana, as measured by the daily changes in the benchmark futures contract. That doesn't tell me. If near month contract is within 2 weeks of expiration, the benchmark will be the next month contract to expire. The natural gas contract delivered at the... Yeah, it doesn't tell me, but find out when. Just find out when. If you're going to sit in it. Because I just hate for you to get in a resettled thing and then it makes you lose money. That would not be good. But still, I mean, it's a lesson. All lost trades are just lessons, right? It's not terrible to lose trades. It's not fun, but it's not terrible. BTC touched 50 RSI and the 21 EMA bounced. Yeah, it's trading all over the place intraday. Yeah. All right, so it looks like it wants to go up for now. The market's open, so it's going to do whatever it's going to do. That's today's open. Yeah. So there's the daily high. So it looks like you're looking for a fresh daily high at least. Yeah, it did bounce off the 21. But you could probably find intraday support down there also. Let's just call that it. Let's get rid of this. That. So right there, like literally, I guess you could say it did bounce because this was a breakdown. It closed under that one and above this one. But yeah, it looks like it did. Somebody bought it at the 21. It is definitely usually a good place to start looking to be a buyer as long as your closing daily is above it. And you did make a higher close relevant to this, or, you know, in relationship to this close. That's good. Trust me, I hold a lot of Bitcoin, so I want this asset to go up. But if it's going to continue to go down, I will short it to zero if that's where it wants to go. Because I'm about making money. I'm not about loving Bitcoin. I love Bitcoin because of the potential gains you can make in a day, but like for the last several days, this thing's only been moving 1.5%-ish. Like even today, look, you're only up 0.18%. That's not even a 20th. There, now you are. Now you're at the 0.2. This is moving like a Forex pair. That's not good for Bitcoin. Bitcoin likes, like when it moves 5-6%, that's when you make money. But it looks okay. Could you have bought that? I would have said no. However, the midpoint is a place. Let's see. Ooh, no. The midpoint of that range is up there. You can't just do close to close because it's not accurate. Close to close, though, I mean, open to close puts the 50 right there. So I guess 50% of the body of that candle. But I wouldn't have done it that way. I'd do the whole entire range because that's the range that price moved that day. It's important. But that's a nice, good close. All right. For you bulls out there. That's a good close. I honestly thought Bitcoin was going to get sold off. That's why I took a short on it. But it did. Not yet. So as long as we're structured like this, this is good. That's where you want the 21 to be. You want it to be above the 50. 100 is under the 50. It's all the way down here. Where's that 200? All the way down there. This asset is still structured bullishly on the daily. It wasn't through here, not so much. It tagged the 100 and... I mean, if you'd have bought the 100 test, you'd be in good shape. You'd be up $1,000. Yeah. It's just not moving enough for me to trade it. Like I want Bitcoin. This is that's a good start. Now we need to see today close higher. If it doesn't, this is going to be looking terrible. That's a nice bullish momentum move there. You had your day of pullback. I guess you can have another day of pullback and then tomorrow go. But if today closes inside of yesterday's range, that's not going to look good for bullish continuation. So we'll see how it plays out today. We want the close today to happen above 29,770. Ooh, because even though the close is good, it's still not. There's daily supply right there. Even though you traded well above it, you closed under it. You definitely need a daily close above that. Screw this day. You need a daily close above this. And then you need a daily close above that. 30,084-ish. 81.64. So we need to blast through both of these and close above today or tomorrow, but soon. All right, and there was one other one out there I seen, just added to my position. Good job. Can you cover PayPal? Yeah, PayPal was one that I was going to trade, but I traded Etsy instead. Etsy was a better trade. PayPal, and it would have worked too, though. It was last week. I was literally looking at it, but Etsy had better premiums, so I took Etsy. Etsy worked as well. Got 100% profit on that. It looks bad. It looks bad because all you've done is you've retested the yearly opening range and you failed. Even though you beat on earnings. That is not a good sign. When you beat on earnings and fail. Here's your 200. Like, not good. In fact, what is going on here? This is supposed to be paused. Now it's paused. All right. This thing hasn't really been good since you had a death cross all the way up there. Look. Since you had that death cross right here, I don't suggest you sell when you get that or anything like that. That's not what you use it for. That you use this essentially to tell you that there is a death cross on the moving averages, which means it's more than likely going to be bearish. Earnings, all good. Bad earnings, good. But still, you resume with the trend. And look where you are now. Like, it's getting closer, but it needs to break out. Yeah, that's where I was going to take the short call at $85. But like I said, I took Etsy instead. It looked better. But you need this thing to get above $80 and start closing dailies above it. And then you'll get that golden cross on the moving averages, which typically means bullish continuation. So would I buy it down here as support? I don't know. I mean, PayPal, I guess, is like, is it in the financial sector? It's in the NASDAQ. Is this traded as a tech stock, not a financial? So I don't think they're going away. If anything, I mean, as long as they're making money, they should prosper. You're about to come into monthly support. That's not it. That is. If that area holds, then I like it, okay? But you got 21 days left to see if this holds or not. So don't just go out there and buy that price. Please. Well, it looks like that's exactly where it bounced. I guess you could have just bought that price at the close yesterday. You'd be up today over almost $2. Oh, $1. $1 you'd be up. Man, I'm glad I got out of Celsius. Look at that thing. It's going right back up to the open. So I'm glad I got filled on that. I was sweating that trade. I mean, not sweating the loss. I was literally sweating it getting to 180. That would be terrible, right? Because you're already losing money from where you sold it. But as long as you sold it within a couple of days of, expiration, then the time decay is going to help. And as long as the implied volatility drops. But it was literally climbing. And those those options are $2.50 wide. That thing moves. That'd be a good day trading stock if it was cheaper. But it moves good for sure. If it had more, I can't trade the options, day trade the options because there's just not enough liquidity in it. This is a good spot to watch. 61.99. If you start closing dailies under that, then the lowest you want to see it is to there. All right. Let's see if the weekly is lower. The weekly is lower. Always go by the weekly. There's right there's weekly support. That would be weekly demand, but when the candle body's that small, I just expect price to go on and touch resistance or support. But those three prices are the areas to watch. Right in anywhere in here. I mean, that is a nasty weekly candle, bro. But it's because of earnings. I don't know why. They might have, this wasn't a very good. It says it's a 0.54%. That is good. All right, I gotta call this person back. All right, we're gonna go ahead and wrap it up. Yeah, just watch these prices right in through here. And if it holds on a daily closing basis, maybe you can start picking up a few shares if you're looking for an investment. Day trading wise, it doesn't move very much. You got to get all the way up here just to be in a 64. So it would just be like a long duration set in and hold, buy a couple shares and then leave it. All right. All right. With that, we're going to wrap it up. I'm not here for the tech. I hear you. Sorry for repeating. Can we look at stocks? Oh, I didn't even see your first one, so apologies on my part. Let's go look at stocks and we'll wrap it up. There's 2 X's on that, my friend. 2 X's. Socks. Yeah, it looks like Nvidia. It has lost the 21. Let's get rid of these others. It has lost the 21. So it's like everything else, like NASDAQ and tech and S&P 500. They've all kind of put in this sort of like topping formation. This is what we call a distribution formation. When you have a high here and then you make another high, but it's like insignificant, the distances, and then you instantly pull back. This time you didn't even make a new high. You pulled back. Then you made a new high from this high, but it's still insignificant, right? And then this one is really insignificant. And then dump. It's not a dump, but it's a pullback. This is a distribution formation. Other people call them Wyckoff distribution formation or whatever. It's a 3-drive topping formation. Here's your first drive. Here's your second drive, your third drive, and then that's usually when you get your pullback. Now, if this is an actual distribution formation, this thing's going to be trading probably wherever the 200 is at the point in time that price gets there. So, I mean, it's still bullish. And I don't trade patterns. Here's another one, right? High, insignificant high, insignificant high. But this is more like, this is a better formation, if you will. So we're kind of watching it. Like I said, most of the positions that I've taken are bearish. So 518.41, as long as it's closing under that, I would look for shorts. Profit target on those shorts would be this candle there. This would be the range that I would look to trade in. For a long-term investment, I say leave this alone for now, right? Because we just got inflation numbers and they were higher. Okay? So we got to give it some time for investments. Investments, now is not the time for investments. Down here was the time for investments. Now is time to take profits. Okay? Okay, sorry. Ote is what I say to my baby. All right, so that sucks. This is the range. Well, 518.41 is resistance, 580 is support. Short it there, buy it here. That's what I would do. If you close the daily above that, though, then you're going to lose on a short position. Or just wait and see how the daily closes, because it is a stock. So 4 o'clock. Where's this thing at 4 o'clock? It might roll over right now, like, because it's at yesterday's open. We'll see what it does. I wouldn't short it based on that, but it could also get to that would be supply right there, because that's the highest a closed candle before you dropped. Well, you can already see how it's reacting to yesterday's open. Is it going to hold? I don't know. I don't know what price is going to do ever. But there you go. That's what it looks like right now, my friend. It's trading at yesterday's open. So I wouldn't do anything with it today. Yeah, I wouldn't do anything with it today. I would just give it a few, a little bit of time and see what it does. If it could get up there to supply or resistance, then I would think about it. But just yesterday's open's not good enough for me. All right. With that, I thank you guys so much for being here. As always, I thank you for your time. Make sure you guys trade safe and make sure you guys trade smart. And as always, happy trading, everybody.